All right, everybody, we are live. Welcome. My name is Bronson Hill. I'm the CEO of Bronson Equity. We do multifamily investing, mostly in the Southeast. We've got a super exciting event today called Your Best Inflation Moves. What should you do as inflation is high? And a lot of assets are also very high in valuations as well. So I've got three amazing experts here with me today. I'm going to give a quick introduction. If you're joining us live, just put in the chat where you're coming from. If you are watching this on a replay, go ahead and stick in the comments, where you're at as well. Would love to hear from you as well. So with us today, we have Chris Martenson from Peak Prosperity. Welcome, Chris. Good to have you. Robert Helms. Good to have you. Robert Helms from the Real Estate Guys. Welcome, Robert. And we've got David Morgan from the Morgan Report. Welcome back, David. We've had you before as well. So guys, we're just going to kind of jump right into it. This is going to be kind of a roundtable discussion. I'm going to ask a few questions, and then we're going to actually, for the last, probably the last 20 minutes here, we're going to do some Q&A. So if you do have any questions, anybody who's watching live, you can go ahead and put those in the chat as we get closer to the end. You can put them in the chat now, but we'll get to them toward the end. So let's start with David. I know you write a lot about economics and where we're headed. And let's just talk a little bit about kind of options the Fed has to deal with inflation. Biden is saying, hey, I'm coming down on inflation. I'm going to do what I can, but it didn't really seem like there's a lot of action steps there. So what options do the Fed or politicians have to help fight inflation at this point?
Well, I'm probably more interested in what Chris has to say on my comments, but as far as I'm concerned, they're boxed in. I mean, the only tools they really have as believers in Keynesian economics is to inflate and keep inflating until the currency's destroyed. They could, if the Fed was really serious about quantitative tightening, they could continue to raise interest rates and take the bond market down, and that is deflationary. But I doubt that's going to happen. Jim Poplava from a Financial Sense did a study one summer on all the previous inflations, and what he determined was that any time there has been a currency that's not backed, it went into an inflationary depression, not a deflationary depression. So they're going to keep extending and pretending. They're going to extend and print as long as they can, and extend it until the market forces take over. That's what I think will take place.
Chris, did you have any thoughts that you want to add to that? I'd love to hear your opinion of that as well.
Well, yeah, just not much to add. I really was taken for the theory of Eric Jansen of iTulip way back in '98. He called it the Kapoom theory, which was that when we get into these big printathons, that the choices are really bleak. It's like David said, there's a rock and a hard place. The rock is you crash your financial markets, which means you fundamentally crash your economy because they're living on cheap credit, or you crash the currency system, but you crash it upwards in an inflationary spiral. So what do you do? And Eric thought there was the Kapoom theory, said, well, the Ka is you get this deflationary scare, it scares them, and then people beg for things to be done. TARP, shortfalls in all kinds of key supply chains, ranging from raw commodities to finished chips that go into cars and computers and things like that. So that's something that's actually, for the first time in my adult life, there is now a set of parameters that are outside of the Federal Reserve's control. And biggest of those is oil. They can't print it. What are they going to do? And so I think that's a lot of where I set my sights right now.
Right. That's really interesting about the kind of the crash and then inflation and just printing. And that seems like the playbook, the Keynesian playbook. Robert, I know you and I are both real estate guys, so we love investing in real estate because it does offer some, inflation hedge protection. Do you see, a recession coming, and how do you see, obviously the real estate is not one market, it's many markets, but what are some aspects of real estate that perform well in recession, or things people should do when learning about real estate in this season?
Yeah, that's a great question. And it does vary based on the market, right? Experts predict that real estate prices will either rise or decline in the future. But we're at a point where for the last many quarters, everybody's wealthy, right? Rents are up and prices are up and lumber is up, right? Everything's up. And I meet these real estate investors who are so proud of themselves, right? Their apartment building has gone up in value. Well, not really, right? As David can tell you, the value based on dollars is not the same as true monetary value. And so as real estate investors, we get to hedge inflation on both sides. It's a really unique asset because of that. So long term, we love debt because debt lets us borrow at $1 today and pay it back with what is going to be a dollar that's worth less, not maybe worthless, but worth less. If you look at the history of the dollar, everyone's seen the chart. It's a very clear trend. The direction that the dollar is headed is extremely obvious. And so that means when I borrow $100 today and I pay it back, yeah, I'm going to pay interest, the rent on the money. But when I pay it back, it's worth a lot less. So I short the dollar by investing long in real estate with debt. At the same time, real estate is a hedge in terms of the rents. Rents go up. And if I've got a fixed rate mortgage, then I've created this little wedge between what I'm taking in an income and what my expenses are. And so it's good to be in assets that adjust, if you will. And the other unique part about it, Bronson, and people have a hard time understanding this, you look around, you say, well, every house on my street's worth $500,000. Well, that's not really true. That's maybe the most recent sale. But what would happen if every single house went on the market tomorrow? All of a sudden, the price isn't $500,000. But the great news about rent is the rent transaction settles every month. If these were rental houses in the neighborhood we're talking about, everyone pays the rent every month, and that's in the books. So it's a unique way to look at it, but real estate really does protect to the upside and the downside.
Yeah, we had George Gammon on this panel a couple times, and he was talking about this principle. If you have a 30-year fixed mortgage on a house, it's basically, like you said, you're able to borrow at a low rate when inflation is higher and you're paying off the dollars in the future that are worth less. So the asset itself really is the debt, right? So that's, and we've talked a lot about that, and you guys talk a lot about that, about taking out debt to take advantage of inflation. Obviously, no specific advice for any house if possible. So Chris, let's talk a little bit about, I know you have a very unique platform that talks really, and you've really, I would say, forecast a lot of things that happened during the pandemic. You really saw a lot of this stuff coming about, trying to live more sustainably and kind of off the grid, and having the ability to kind of have a second place and prepare in different ways. What are some things that you're seeing that are really important right now when it comes in light of inflation and in light of some of the global events? I guess you can take that a lot of different directions, but just what are you seeing right now?
Yeah, one of the best comments I got was I was doing this daily COVID update for a while because my background's in science. And so I spent some time doing that. Most of 2020 was just solid COVID updates. But I would end every one of my updates, pouring through a clinical trial. And at the end, I would give this little encouragement. I would say, plant a garden, right? And the best comment I got, somebody said, this is the deepest 3D gorilla gardening channel I've ever seen, right? Because that's what I was constantly telling people to do after this big dive into science, right? And the reason for that was, this was fairly easy to foresee that we were going to have all these supply chain difficulties, and that these were going to have a strong possibility of really impacting our food systems, both from an inflationary standpoint, but maybe even from an availability standpoint. So if people have heard about baby formula, sure. But if you go well, here, at least in New England, if you go into the vegetable section, it's not what it used to be. It's like there's all kinds of missing holes, and it's really sparse. And my prediction is it's going to keep getting that way for a while. And so what I really am encouraging people to do is to get back in touch with the base, the bottom two rungs of Maslow's hierarchy of needs, right? The pyramids that right at the bottom is your warmth, your food, your shelter, things like that. I really think that this is going to be an area where people, if they're going to be facing high inflation, the extent to which you can control those down at that bottom end, like one of the best investments you could possibly make here in New England, better than anything Wall Street could promise you, is to re-insulate your house. It's astonishing. It has like this 18% ROI for most people. So I really advise that people look at these trends that we have going on that are structural in nature. We're not going to be solving the oil shortfall for years to come. The reason for that is that in 2015, there was a huge collapse in the price of oil. Short time after that, it even went negative for a little while. What's negative oil? It's a weird thing. And then it was very low. It was lower than the cost of the all-in production cost. So guess what? First investment decisions, the FIDs in the oil majors, didn't happen. We didn't have deep water wells being put in. We didn't have all sorts of onshore investment. And that was 2015, 16, 17, 18, 19. That's in the bag. And there's nothing we can do about that. Even if we threw trillions at trying to speed up the process of finding more oil, you can't. It's not how the business works. So one of the things I've been looking at when I saw that happening was, I said sometime around 2000, 21, 22 is where we were going to feel that first bite of that oil issue, and it's going to be with us for years. So that's where I think we're at, and that literally impacts everything else out there, from food to energy to a lot of derivative things that are hard to get your arms around. But that's the future I see. And it was really just an easy prediction based on the.
I just finished a book called Range, which basically talks by David Epstein. It talks about specialists and generalists, right? So specialists focus on just one little piece of the pie or one little specialty thing. But obviously you are a specialist because you have your PhD, but you have such a range of different things you're looking at to look at all of the pieces to bring them together. And it was just talking about the value of how generalists are great at being able to solve problems. And so I see you both as a specialist and as an expert in a very toxicology and the things you do, but also you're able to bring all these different things together. So I really appreciate that about you.
Thanks.
David, I know you're also a specialist as well, and you're a generalist as well in a lot of different areas. Let's talk a little bit about metals and just talk about, obviously we're talking about inflation primarily at this event, but what are some things that you're seeing in the metal space for someone maybe that is newer to metals or really doesn't have metals in their portfolio? What are some things that you're seeing now that people should consider looking at getting involved in precious metals?
Well, the precious metals have shown throughout history to be a hedge or money of last resort. I think the banking institutions still feel that way, although they don't verbalize it. But if you look at what the central banks have done from 2011 to present day, they've been net purchasers of gold. Gold is definitely a monetary asset, and with the latest legislature through Europe, it's considered a tier 1 asset. It's called Basel III, which means it's as strong an asset as this currencies that we print in different nation states. Silver is a different story. It has a great monetary history for a lot of years, but it was really demonetized during the 19th century, and it really hasn't been considered money by any of the banking system. So it's really considered by the establishment as being an industrial metal. Although it has most of the properties that gold enjoys, it also has an industrial component. And therefore, if there is a monetary conundrum and people decide to move out of, let's say, what's considered safe asset classes like bonds and stocks, there isn't a lot of place to go other than real estate and the precious metals. And of course, real estate does have a downside as far as a high inflationary environment, because most is debt-based, which means if mortgage rates are high, it curtails the amount of people being able to purchase real estate. But back to the metals, I've always advocated a position in metals for everyone, but not to overdo it. You can overbuy. You can get the gold story or the fiat story and decide, oh, the metals are the way to go. It's part of balance. Nature preaches balance. And I know this is going to be on inflation, so some other comments. As far as the other metals are concerned, this goes out to people that can think on their own. I'm not trying to take any sides. I try to be objective in all of what I do, and I can't. I've got my biases. But this whole green thing is really a phenomenon that most people don't understand. A good friend of mine that does independent research as well looked at how much it would take as far as Earth movement is concerned to go green for the planet. We'd have to tear up the Earth about 10 times more than we already have if we're going to go green everywhere. So people don't understand. Mining is vital. It's imperative. We have to have it. But the idea that, you just get your electricity out of the outlet, that these people have no concept. And I'm not talking to everyone. Probably anyone tuning into this has got a pretty good grasp of the reality, but a lot of people don't. They think if they're using an EV of some type that they're contributing to the benefit of the world. And in a way, they're not. In reality, they're not.
Right. Very complex issue. So appreciate the thought on metals. I've got my gold bar right here, so don't anybody come steal it. But obviously, it's not real, so don't break into my house and steal it. I wanted to kind of shift gears for a second here, and we can come back to any of these topics. But I want to ask a poll to the audience. There's this question of, should I, with the cash that I have, should I invest it all, or should I just hold cash to be able to invest if things crash, right? That's a good question. I mean, I know people in both camps that I really respect. So I'm going to put that out there. If you guys can just put in there, I'll share the results when we're done. But, would you invest it all or piles of cash, please? And I'm going to actually have to go around and ask each of you kind of, if you have cash, which of those would you prefer, invest it all or hold cash? And again, obviously it's a range. So when I say invest it all, it's not that you're putting every dollar in, but let's start with Robert. What would you say, piles? So Chris, what about you?
I'm pretty much at the stage where I'm throwing cash out the door. I'll just, anything I can buy to have the big brown truck of happiness roll up and drop a package off. I'm way irresponsibly into metals and real estate right now. I'm sitting here in Western Massachusetts on about 270 acres, and it's trees and water. So I'm really at the very, I'm way down into resources at this point in time. That's where I want to be. And I'm convinced that when, not if, but when, as David talked about, when we see the Federal Reserve just open those floodgates again, that's when I give to all of my followers the run, don't walk signal. Third base, just run home and just spend it all. Get into things. So yeah, I'm not a big fan of cash right now.
Yeah, no, it's great to own things that store value or assets that pay you to hold them, which is awesome. So, what about you, David? I think I already know what you're going to say, but I would love to hear what you're going to say.
Yeah, I pretty much go along. I just probably add a little color to it, and that is, Milton Friedman said that inflation is always and everywhere a monetary phenomenon. Being an Austrian school, I pretty much agree to that. I mean, if we print more money, it's inflating the money supply. But really, it's more of a psychological phenomenon. That's what von Mises talks about, the cracked up loop. So it's a self-feeding loop. So once people go to the store and the gas station and it's higher and higher and higher, they decide, I'm going to spend this money, like Chris said, so I'm going to get something tangible. Maybe it's just a case of tuna fish. Maybe it's 2 extra jars of peanut butter. Maybe I'm going to fill up a 5-gallon gas tank. But that psychology is what I'm talking about. And once that takes place, and it doesn't have to be the majority of the population, just enough of the population, then you've got this feedback loop that, and that's going to push prices higher because you got a supply chain problem and there's less of it and there's all kinds of disruptions. So it feeds. And this is where we're going. I really think that all the monetary history I've studied, it's more about psychology than it is about math.
Right. And we all kind of said a very similar thing that obviously, dollars are being inflated, get into assets. George Gammon, who I think we, most of us know and respect, that he says he's actually holding a fair amount of cash right now and selling a lot of stuff so that if there's some sort of deflationary event, he can go buy a bunch of stuff or a bunch of different things to be able to do that. Are there any other ways to take advantage of that to get liquidity, meaning you have liquidity available? Maybe it's not in cash in a bank because obviously there's a high holding cost of 8 to 15% or more. But what are some strategies to basically have some liquidity in case, something that's easy to sell, like a farm is not necessarily as easy to sell. But Robert, maybe we start with you. Any thoughts on ways people can kind of have some liquidity while investing in stuff?
Yeah, this is the age-old thing, right? It's why we like cash flowing real estate, because there's liquidity every month. But beyond that, metals are really liquid. Right? I mean, price fluctuations, certainly, but my premise is that the value of an ounce of silver doesn't change. It's only the price that changes. And so I'm probably like Chris. I'm probably inordinately stacked that way. I think that gold is money, and so I always want to have some with me. But I think it's also part of it is liquidity. What's not liquid is getting rid of my 350-unit apartment building. If I need to cash that sucker out, unless I'm really, really, really going to discount the price, there aren't that many buyers. But if I have real estate that produces cash flow on a street level to B and C class tenants, well, that stream of income is worth something and I can get to it. I don't want to hang on to it very long, but that's the way to think of liquidity. And agriculture. A lot of agricultural products create liquidity, either weekly or old. But if the market's gone down 30%, you're actually ahead.
Right. Right. Exactly. Yeah. No, it's challenging to balance that out. But you're right. If you go from cash to asset to cash flow, which I've heard you say that, and I've heard Russell, your partner, say that, that's really an ideal spot. Chris, what do you think? What are some ways to maintain liquidity while you're spending and buying stuff?
Well, I have a same thing as Robert. So I have a variety. I've got a lot of physical gold, but I also have gold held in accounts. I consider that's liquid, highly liquid. I can be in and out of that and convert that into cash anytime I want within hours. So it's a very, very fast, very liquid market. So to me, that is it's like a better savings account. And then I do invest a lot in my business. I've really expanded my business this year and got a whole new team on board. And we're just really I'm really expanding into the opportunities that I have before me. I think that inflationary environments are extraordinary opportunities. We're facing what I consider to be insurmountable opportunity right now. There's so many new business categories out there because I'm fundamentally in the media business on one level, and our mainstream media is completely dropping the ball, and they can't get out of their own way to figure out how to fix themselves. So that's an extraordinary business opportunity for me, because people seem to like context-rich, truthy kind of news and information that they can use. So for me, I think that these environments like we have right now, a lot of people are going to experience them, especially if you're clinging to an old model that's getting just chewed up by this thing. That's very bad. But it always opens new opportunities. So the advice here, the best liquidity I have, is to just be nimble and understand that for every closed door, there are these new opening doors that are happening, but it's highly chaotic environment. So you got to be quick.
So when you talk about liquidity and being in accounts, are these ETFs, and are you concerned about counterparty risk in that, or is it just because
no
no
ETFs?
Okay,
no ETFs for me. Fully allocated accounts in stored places that I trust.
Okay, and then you can liquidate when you need. So yeah, that's something I think if somebody's new to the metal space or does not own any precious metals, just to consider owning physical metals, because and we can get in that. Actually, I'd love, David can kind of touch base on that too, but they'll sell 20 shares of one actual, ounce of gold or silver. And, if there's a run, obviously who gets paid, you may not get paid, which is really tough. David, talk to us a little bit about the prior question about liquidity and, kind of how you maintain liquidity, and even if it applies to kind of what I was asking Chris there at the end.
I think as much I can add to what Robert and Chris said. I mean, I'm overweighted the metals as well. I think it's safer long term than it is cash. I do keep some cash. I mean, if you look at a worst case scenario, and the ATMs stop, or there's an EMP or a cyber attack of some type or anything along those lines, having physical greenbacks would be valuable to you, because you'd probably be able to go to the gas station and buy gas if the ATM wasn't working. But I think the main part of the liquidity that no one touched on, and it's kind of off topic, is living within your means. This is something that a lot of people are going to learn the hard way. And I know Robert and his partner, and I know what the approach they take is a rather conservative one. It's good to leverage, but you got to know what you're doing when you do it, and you got to look at a bandwidth. The worst case is here, the best case is here. I'm here. I'm prepared for this. And if you do it in that manner, I think you'll be okay. And going back to what Chris has said, and I know a little bit about him, having read his books and talked to him personally, how to be a quant when you're getting into the, CDO market or whatever. Not important, not in these times. In these times, it's very important. And lastly, again, a bit philosophical, is your attitude. You've got to have this anti-fragile mentality. And no matter what comes at you, you're going to be able to weather it, and you're going to be able to come out the other side.
That's great. Well, thank you all for your answers on that. I want to just share that. I don't know, can you guys see the results of the survey there? Everybody can see the poll up there. I don't know if you can see that or not on the side. Maybe not. If you're under polls, you guys can click on it and see it. But 61% says they would invest it all, and 38% would say piles of money, please. So Scrooge McDuck for the second half. So that's something we're going to continue to wrestle with. And obviously there's different ways that you can do that. So thank you for sharing. Loved. I just wanted to touch base on the debt idea. The idea is borrowing money at a lower rate for a longer term and investing at a higher rate for the short term. So that's kind of what David was alluding to and Robert was talking about. So we've talked about real estate. We've talked about metals. We've talked about real stuff. Let's talk a little bit about digital currency. Let's talk about central bank digital currency. Let's talk about Bitcoin and cryptos, and have taken a big hit recently. Robert, what's your opinion of Bitcoin or cryptocurrency in general, and how, if the central bank, the U.S. Federal Reserve comes out with a central bank digital currency, how do you think that will affect the value of these, and what's your perspective on that?
Well, it's a big topic, obviously. You can be sure that all the central banks have their eyes on this. It's not, I think, a matter of if, but when. And part of it's because they're left out of the game. To me, the most exciting thing about blockchain is the distributed part, the fact that there isn't an all-knowing being that controls everything, which is exciting. I think people that say, cryptocurrency is the new gold, I don't agree with that. I think they both have a place in a portfolio. Cryptocurrency is really less friction. It's easy to transport. It can be private. It's not as private as people think. So there's reasons to enjoy it. I still think it's very speculative. Today you'll hear a business takes Bitcoin. Well, no, they don't really. They take Bitcoin and they instantly convert it to cash through a mechanism that has a lot of friction. That's not the same as taking Bitcoin. And so I think it's eventually what makes a cryptocurrency actually a currency is when people do trade in it and not just trade out of it. So I have exposure to it. I kind of like watching it. I think that it's got a long road ahead of it. We're still really, really, really early in it. But believe me, the governments are all about this too, for a completely different reason, by the way, right? Governments want total transparency from you to them, not the other way around. They want to know where you spend every dollar, everywhere you go, everywhere you move. And we continue as a species to trade our, comfort for our privacy. And that's just gotten us into a trouble, and it's probably going to get us into more. So I like the decentralized part of it, but to me, it's not really an investment other than being a place you might put a little bit of money and be really speculative.
Right. I think the thing that got me thinking about crypto, that got me from not investing at all to where I have some now, and I have, not a ton, but some Bitcoin, is looking at what happened with the Canadian truckers, right? Possible to you, which is interesting. Chris, any thoughts on crypto? What are some of your thoughts?
Well, I'm like you. I've got a toe in the water. It's just, I think, to keep my attention on it. I'm really enamored with the technology. I think it could be do a lot of things, but I've been waiting for that killer app for like 13 years now. Like where is that? I'm still waiting for that thing. Besides, this is a great place to speculate. And so we're all kind of waiting for that thing to come along. And then I've been really creeped out by looking at the central bank digital currencies, the CBDCs, right? They've come along, and the Bank of England said, hey, we have some decisions to make, because once we unleash these things, we'll be able to gate people from preventing them from spending money on this versus that. Is your weight a little high? Your central bank digital currency is no good at McDonald's, or, whatever. So that creepy totalitarian side of that, I'm not a fan of at all. And so I'm a little worried about that, because I see a big push and you can just feel it coming. And I know that you mentioned Canada. I really don't trust the way the Canadian government has behaved towards its own people. I don't like the marginalization. It feels like a way for a despot to really have their way and overexert their power. And I have not been at all happy with how they've been exerting their power so far. And, they've really been driving wedges and dividing people. And it feels like a divide and conquer kind of a thing. So that's my concern about it. I think it was a great experiment. It got run, but governments, of course, immediately took that and found ways, I think, to begin turning it into a very bad idea. Who knew? Right. But that's what I see coming in that side. So I'm not a fan of the early direction I've seen the CBDCs going.
Right. It is kind of crazy, some of the stuff that's happened over the last 2 to 3 years, that if you said, 3 years ago, oh, this is going to happen or that's going to happen. I mean, it's stuff where like, what's next, right? It just can't get any more crazy. Just this more stuff that's crazy happens. But it's stuff that if you're paying attention as you are, and I know all of you are, is really, you'll see some of the signs of this coming. So David, what about you? I know you're obviously a metals guy. Are you also into crypto?
Yes, put a timer on me, Bronson, because I could go for a long time. I did the other side of Bitcoin. First of all, there's an article I wrote years ago, I think in 2014, my 2 bits about Bitcoin. I wouldn't change a word of that. But as far as going a deep dive on the other side of the coin, I started a series in October, November of last year. And I was urging people to take a look at what I considered was an overvalued situation in that space. Not financial advice, just entertainment. And from that point till now, it's dropped in half. And we found some very interesting things. One is that a lot of it came through MIT. I researched that. It looked like the banks had usurped it. And it's not as free market as we'd like to believe when the white paper was written. Well, I interviewed Kurt Wuckert on the 14th episode of the Crypto Conspiracy series that I have on my website. And he verified that MasterCard basically has usurped the whole Bitcoin space. The whole space, no. but like any bank, they have the lion's share of it. So I like the idea of blockchain, and I'm involved with one. And for Chris's benefit, I've been involved with the Load project for everybody's benefit. I'm trying my sixth sense of humor, but we are coming out with a new wallet, hopefully by the end of June, and it will hopefully integrate normal banking services that we have now with cryptocurrencies across all platforms, where you'll be able to use a plastic debit card, et cetera. It's been a long time coming. The project taken a lot longer than I'd like it to, but one of my mottos is I'd rather have it right than fast. Time will determine whether or not that comes to fruition or not. Back to what Chris said, just to add a bit more. I mean, Mark Carney gave the same speech at the United Nations, Davos, and in Jackson Hole at the Fed. And he said that they wanted a unbacked, modern money theory, central bank digital currency backed by absolutely nothing. So what we all know here on this, on your show, Bronson, is this isn't working. This is breaking down. We're at the death throes of another inflationary experiment that's going to end in tears. And yet he wants more of it. So, whatever doesn't work, let's do even more of it. I mean, it drives me nuts, but that's the attitude of some of these bankers, him in particular, because I could quote that he gave that same speech. And so I'm very concerned, and I have been for a long time, as anyone studied, looked at me more in a cursory way would know. But it's not the end of the world. We're going to get through it. But, we need the power. And if you believe what I believe, that money is power, we need to put the power back in our hands. Can we do it? Yes. Can blockchain help? Yes. But we need to make sure that it's us, not them. And I think that's where the next fight may take place.
And there's a book out called When Money Dies, and it just talks about hyperinflation in Germany and Austria. And it's a great book. And it's just, you talk about doubling down on what doesn't work. I mean, they just kept printing and printing and printing and printing to the point where you fill wheelbarrows to get a loaf of bread. I mean, it really happened. And so we think, how could that happen? But, stuff that happened then is some of the things are happening now. And obviously, whether we go that direction or not, or we see, Jerome Powell channel his inner Volcker and get things back under control. We'll see if that happens. At this point, we're going to start taking some questions in the chat. So if you have any questions and you're watching live, go ahead and drop those in the chat. I wanted to, as we're waiting for those questions, wanted to go around and just say from each of you, what are some developments that you're watching right now? Saying I've really got my finger on the pulse in this area when it comes to inflation, when it comes to governmental policy, when it comes to spending, when it comes to.
But I think 16th floor units in Miami, maybe not, right? Because for the reasons that Chris always articulates so well, it's great to be able to be a little more within your self-control. If you are going to at least plant enough calories to sustain yourself for a day, if not every day, it takes on a completely different, role in your life. And I think real estate has that. The oldest use we have of real estate is agriculture. I love real estate that I can go to, that I can spend time with, but has an economic model. So there's a lot changing in that regard. There's always winners and losers when we see big shifts. And so we're trying to think ahead as to what's going to have value in this brave new world.
Great. Thank you, Robert. Chris, what about you? What are some things you're keeping the pulse on or keeping an eye on?
Three big things, and I'll start with the third one, which relates to what Robert was just talking about. A good friend of mine is busy trying to find rural property, right? So he wants, minimum 10 acres, but 20 or 30 would be better. And it's just getting outbid all over the place. Meanwhile, in cities, we're starting to already see the slowdown in housing. So that was a big trend I thought was going to be coming, is people moving out of cities into more rural areas, but they don't want to live super far out. So those sort of exurby, that next ring out of cities, I think is still seeing a lot of pressure from people wanting to buy and move into those situations. And as well, we're seeing the blue states, which had some of the most restrictive and deadly COVID policies, and continuing those, we're seeing for some surprising reason, a big flight of people away from those, like from New York to, say, Texas or Florida or other places like that. So we all know about those big trends. The other two I'm following really closely. I mentioned oil. This is a really big one. People need to familiarize themselves with it because it's not just another commodity. I'm not saying wheat, soybeans, cotton, oil. It's not in the mix. Oil's the master resource. Everything else is a derivative. So if you can get your arms around that, China's already officially recognized that they're past their peak of oil. Russia's officially recognized it. We're just wandering around whistling in the dark in this country, but we'll get there. We'll figure it out. And then the last one is food. And this is mostly related a little bit to the war in Ukraine, because there was a lot of prime acreage taken out that didn't help. But we have some pretty bad weather this year. And on top of that, we had a self-inflicted wound of governments not stepping in to help stabilize fertilizer markets. And it's just astonishing. So it's a quick story. A lot of farmers did not fertilize their spring wanted to fertilize, but we did spend that $48 billion in Ukraine, right? So priorities, again, bad leadership all over the Western world has led to, I think, what's going to be a really miserable harvest this year. And this is a global phenomenon. So we're going to see a lot more food price inflation, but that's the least of it for our country. It's going to be more that, what do they say? Every country is only 3 meals away from anarchy or chaos, right? So I do think we're going to be seeing more and more and more of that dynamic playing out. And I'm really worried about Europe, because Europe has shot itself in both its feet on all of these fronts. And I'm really worried about what's going to happen there. And of course, domino effect, banking crisis starts there. Who knows? But we're really facing a lot of stress. So my advice to that is keep your eyes on those big things. And you got to be a super Gretzky to skate to where this puck is going, because this is all new situation.
Yeah, no, that's you shared so many nuggets in there. Oil being the master resource, and there's a bunch of takeaways. I want to go back and listen to that again. We'll get the replay out. David, what about you? What are you seeing?
Yeah, this may be a Chris Martenson clone, but when I started on the speaking circuit, the old adage that a picture's worth 1,000 words. Well, a lot of my early speeches, I took movie clips. And one was from this docudrama put out by the BBC called The Man Who Took Down Great Britain. I thought it was a replay of George Soros and the currency wars. No, it wasn't. It was all about energy and a mismatch between a hedge fund and the oil industry. But the basis that really woke me up, and I can't remember if it was before or after the crash course, which I recommend everybody watch again from Chris Martenson, is the finance bidder in this docudrama saying, and I can't do a very good British accent, people, so laugh at me, but he says, people think that the money runs on money and currency and finance and that type of thing. No, not at all. It runs on energy. Without energy, nothing happens. And for the most part, that means oil. And that is like the commensurate thing. It needs to be pounded home, because we've hit the energy cliff. I mean, in this big bookcase, I've read most of those. I won't say I've read every one of them, but Twilight in the Desert talks about, from Matt Simmons years ago, that the oil that they're getting out of Guar is mostly water. I mean, there's a lot of water being pumped in those wells, and energy runs everything. I mean, it affects, the cost of food because it's transported, it's used for fertilizer, and on it goes. I won't repeat everything Chris said, but I'm very, very concerned. And if we have a lower energy per capita, we have a lower standard of living for everyone by definition. There's no ifs, ands, or buts about it, and there's no way for the green dream to come true. The green dream is just that, it's a dream. And I won't want to be a hypocrite. I have solar in the backyard here and another place that I own, but it's because that's the only power I can get at the other place. But regardless, it's not that efficient. And it does work, but there's not enough silver, for example, to go green in the United States. For the residential market alone, it would take about 40% more than all the silver that we produce in a year and recycle just to go solar.
They have decided in January, leaf blowers that use gasoline are no longer allowed in most cities in California. So now these guys that are out here, you doing the yard cleaning or whatever, they've got to go buy. I just imagine them having to go buy a stack of batteries to go put on this and do all this in the name of it being more green. What are some policies that you've seen? I don't know if anybody's really looked into the Glasgow Alliance and ESG stuff. Let's talk about that for a minute, of ways that if some of the desires of some of these politicians come to pass, what will that mean for the economy? What will that mean for the U.S. and kind of how the average American is doing? Let's start with Robert on that one.
It's hard to legislate behavior ever. Human beings seek out pleasure and they avoid pain, and they work within confines and systems as they have to. But at some point, love the 3 meals away quote, right? People push back, and we're starting to see pushback. and it's going to come in a big way. And unfortunately, people that are lifelong public servants in government, they've never had to meet payroll. They don't understand what it means to run a business or take care of employees or any of that. And they think somehow policy can create the answer. But as Chris points out so eloquently, if really our government was concerned about our health, they would show up completely different when it would come to exercise and eating and all the things that really do build up our health. If you think COVID is about health, you got to watch a bunch of Chris Martenson videos and get educated about it. And it's the same thing about green. One of our designers at one of our projects is a guy named Steve Muzan, who wrote an amazing book called The Original Green. And he wrote it 15 years ago. And it's all about the thinking behind being sustainable as a builder and developer. It's not political in any way. And yet today, when you look at what green is, it bears hardly any resemblance to any of those folks that really did want to think in terms of long-term sustainability. We consume a lot of wood. We build a lot of property. And the only types of forestry companies we use are the ones that have a proven track record of replenishing. And it's just one little thing about that. That's not because of a law or a legal requirement. It's because that's what feels right to us. We pay a little more for it, but it's a great part of the story. And I think that's the thing is the whole issue we're going to have coming up is the trade-off between toeing the line and standing up and speaking your mind.
There's a really great book called The Moral Case for Fossil Fuels. And I love reading kind of books that are different than the mainstream. And it just basically says our life is much better because we use energy. And he gives examples of being in a third world country where there was no power to power a life-saving device, which they had to try to save an infant's life, and the infant died. And I mean, that's just one example, but there's many things about that they want to, create a policy like you're saying, but it doesn't actually change behavior. Chris, I know you're just chomping at the bit to say something. Let's hear your take on the green movement and how it will affect all of us and where you see things headed.
Yeah, big topic. And you're right. I am chomping at the bit because this is something where I feel like, Nikita Khrushchev standing at the podium, I take my shoe off and I start pounding on it. I want people to hear this message because things that way. Great. Why do we have to get all wonky about that? It's because we're at a really unique time in history right now where I talk to oil executives. I've talked to presidents of oil majors. I talk to everybody in the business. I'm out there looking for them to say, there's possibly tons of oil we haven't found. They're pretty sure we know where everything is, right? And so that's where we happen to be in this story. And it's hard to get this across because everything we think we know about how the world works is based on the past. And that was a very different time. We're going through this awkward period where energy per capita is nosing over. Now, I'm not saying running out, but it's nosing over and it's a different world. And unfortunately, Jerome Powell, Federal Reserve, ECB, Bank of Japan, Bank of Canada, all these people, they're living in the past and they want to keep cranking this crank. And so they make more money while the real stuff is actually flattening out. And that tension is going to snap at some point. And, we'll experience that. Best guess, hyperinflation. But if you don't understand the main driver that this energy is the economy on some level, and what we do with it's complicated and unpredictable because, as Robert's saying, people will do amazing things if you give them like lots of opportunity and energy. Unpredictable. So possibly the most important book I read 15 years ago or so, called The Origin of Wealth by this guy, Eric Beinhocker. And he talks about in the front third about the relationship between complex systems, which our economy is, and energy. And he just keeps going at it until finally a light bulb went off. And that's really part of an important cornerstone of the whole crash course was me understanding this one simple idea. With lots of energy, you get lots of complexity, beautiful, wonderful complexity, which is what our economy is. Lots of beautiful, complex things in it. With less energy, it simplifies again, which is a euphemism for you have fewer things, like fewer, the shelves become empty. We have 300,000 job classifications. Maybe someday we only have 200,000 and then 100,000. Maybe we go back to the original 50 job classifications we had a couple hundred years ago, right? So once you get that main concept, this is one of the most extraordinary periods of time to be alive because this is what's happening right now. And maybe something changes, and I keep hoping that they're going to surprise me with all this alien stuff that they keep talking about, and there'll be some cool energy source that we didn't know about. But until I get that information, Bronson, I got to be clear about this. What we know says we have a serious predicament, and our country isn't really facing that yet. And if you run a business, you know you need a strategy, and a strategy always has two parts. Where are we going? How are we going to get there? What's our vision? Hey, those are easy to come by. We want to live in a green utopia, right? But how are we going to get there is the actual resources. And to David's point, this green vision that people are holding out, it has no connecting function over to the resources that would be required to pull it off. It's just a floating idea. It's kind of embarrassing how disconnected from reality it is.
That's a great answer. Thank you so much. We're going to get to we have a couple more minutes here. We're going to get to your own kind of predictions of where you think inflation will be in 2023. And I'd love any sort, higher or lower, where that's going to be. Before we go there, let's just kind of stay on this topic a little bit of energy. Energy costs rising means higher inflation. When oil is higher, everything costs more. It's just, that's kind of how generally things work. So what are some plays of investing around energy? Would it be buying oil directly or oil drilling? Would it be investing in the green revolution? I know Marin Katuza talks about that, and there's some incentives there. So, what are some, or even buying minerals, certain like silver, other things that they're going to be needed in solar panels and other sorts of battery technology? What are some areas that you can take advantage of as an investor, as an individual? Let's start with David, and we'll work our way around.
Well, I'm going to take, and I'm not a fan of Warren Buffett. I was pretty much a fan of Howard Buffett, that was an honest money advocate. But back on point, I think you got to look at what you need, not what you want. And of course, we need energy. We keep talking about that. So if you bought a good utility stock, they are regulated, as we know, but you could get a dividend off that, and you would get appreciation. And basically, you could have your utility bills paid for if you bought the right investment and held it for the long term. So that's an investment. One stockbroker I know, won't name him, very big in the minerals mining space like I am, but the best stock he ever had was a water company. And that thing paid out dividends up to kazoo. It's probably the best stock. He told me it was the best stock he ever owned. And he owned it for like 30 years. So I think you got to think real basic. I was asked by my readers, my premium subscribers, you've been talking about food, and I was talking about the food problem before almost anybody. I'm not patting myself on the back. I just did. It's provable. And I said ADM. It's not my favorite company. I may not even like the management that much, but it's a great hedge for what I see happening in the food supply. So there's a way to hedge your food supply. So I think you keep it real basic. What do you need? Well, I need real estate. I need utilities. I need to eat. I need water, and I need fuel. And there's ways to invest prudently in all of those. And I mean invest. To me, investing is you buy something and hold it. And it's usually dividend paying, and it's usually conservative. Speculation's a whole different story, and that's not what you asked. So I'll leave it there.
Thank you, David. Robert, talk to us about what you see in the energy space.
So I think there is this virtually insatiable, thirst for more and more energy. I mean, look around at all the devices your kids have. They just suck power out. I think what you have to do is two things. One, you have to rethink your life. To David's point, what does an ideal simplified life look like? So I grew up in scouting. Both my boys are in scouts. As much as they love to be on their electronic devices, when we go camping for the weekend, those things get put in the backpack and they don't even think about them for 2 full days. They're out fishing and hiking and loving nature. And it doesn't take long before the people that are crazily addicted to power to recognize that they don't have to use as much. There was a big push for power conservation back in the day. And I think we're going to have to think that way. At the same time, from the investing point of view, thanks to reading Prosper by Chris Martenson, I have invested in a solar generator. I have invested in a gas generator. I have gasoline on my property, right? I've just made different choices. I think everybody has to do that, not just think about absolute return, but what's it going to look like as this world evolves, as these changes are made. And at the end of the day, what gives us meaning and happiness is not how much money we have, especially when it's going down in value every day. To me, life is about relationships and quality, not about how much can I stack up. It's easy to say once you've got a bunch, okay, here's where I can deploy some. But if you're in the early stages of this, don't fight it. Everyone wants to fight this idea that Chris has been talking about for years, that we have a constantly increasing economy and we have less and less energy coming our way. Don't fight that. Get your mind around it, because you really can sustain yourself and your family in a low footprint way that I'm going to argue could be a lot higher quality than what you experience right now.
Thank you. Chris, I wanted you to touch base as well. I know there's a new, at least I'm a novice at this, so you have much more knowledge than me, but there's a new type. Is it nuclear fission is the one that's kind of starting to be developed more to where they can develop more smaller cells and things that are more transportable?
Yeah. So they have the old style nuclear fission, which is when you split an atom apart. We have these old boiling water reactors, the Westinghouse Mark V's. That's the exact model that torched up and melted down in Fukushima. Those are really expensive, and we're still building some of those. But we have later generation stuff where I was just asked a question by a subscriber the other day. He said, would you have one of these new small pebble bed reactors in your backyard? And I said, absolutely, I would. You betcha. I would love to have a 40-year stable electric supply in my backyard. And this new nuclear technology, I think, is going to be the way of the future. I don't know. So again, if that changes, awesome. But we do have an opportunity that we've missed in this country. It's around something called thorium, which is a nuclear reaction that can be run in something called a liquid fluorium, salt fluorium reactor, right? These lifters. China's already busy building them. They have a pilot plant running. India's busy figuring out how to run these things. We had one running in the 1950s late at Oak Ridge, shut it down because it was uninteresting. It doesn't make bomb grade uranium. It just doesn't make interesting stuff. So we went a different direction from a military standpoint, but that's another area where if we had a comprehensive energy policy, if we were putting efforts towards that, these could really be a legit solution. So once we get there, if we have enough of, as Robert's saying, we have all this power we want to plug into the wall. If we can get that electricity out of thorium, out of fission, hopefully maybe fusion, if it ever comes along, if we can get that, then we can go about the process of hydrolyzing water and getting, hydrogen and oxygen and taking that hydrogen. And we could have there's really cool technologies, what we could do with hydrogen. But what we haven't solved is where is that electricity going to come from yet? And that's going to take massive amounts of investment. And if we're smart, we'll go that direction. It's not quite the green revolution. This would be something but I would be really, I would jump up and down with joy if all of a sudden the DOE announced, we're not giving $1 trillion to Goldman Sachs this year. We're going to put it into thorium reactors. And I'd be like jumping around with pom-poms because that would be awesome. Because that would actually be a legit solution I could get my minds around. But we haven't done that yet.
Right. Well, thank you. That's really great. I love that you bring all these pieces together and you do it in a way that makes a lot of sense. So thank you for that. We are going to get everybody's final prediction here. If in January rates will be higher or lower, which I know everybody loves being put on the spot for predictions. We're going to do that in just a minute. Wanted to share, we have the next event coming up. We do these every month. So on July 6th, I just put it in the chat. I'm going to do a little screen share so people can see it. I think even people on a replay can see this. Okay, so you guys are able to see this. This is the webinar coming up here. This is rising interest rates and real estate. And this is going to be July 6th at 4 to 5 p.m. We've got Stephen Pesavento, Hunter Thompson.
Sure, I think they're going to be higher.
Maybe higher. Okay, everybody says higher. That's a really good question. If I was put on the spot, I think I'd be different. Maybe say they'd be a little low. Well, the trouble is the CPI is like they lie about it anyway. So the CPI, I guess it'll definitely be higher than what it is now. So awesome.
Which interest rate though? Federal Reserve? The Federal Reserve has to be higher, but who knows what the long.
Oh, I'm sorry. I said interest. I meant inflation. The inflation rate, which is totally different than the interest rate. Yeah,
different question. I actually do think inflation will be a little bit higher in January. It's still got a lot of legs.
Okay.
And to your point, Chris, about there being less choices, that's also a different kind of inflation. But it's not just that, oh, this box of cereal costs more. It's I can't get it anymore. Now I have to make different decisions. So it's going to be interesting. This is going to be a fun year to watch.
What about you, David?
Nothing to add. I think we've covered everything. I guess there's one thing that kept coming in the back of my mind, and that was going back to Chris with the exponential function. I mean, if you look at the money supply, just put my Twitter feed, it's an exponential function. And anyone that uses technical analysis knows that things that go straight to the moon don't go there for very long. So I don't think we have a lot longer to go in this conundrum with the banking system as it exists now. And be prepared for being nimble, liquid, and keep a great attitude, because a lot of it depends on the way you think about things.
That's so true. The other side of crisis is opportunity. I think the same Chinese character kind of part of that means for both crisis and opportunity. It's the same thing. Well, gentlemen, I just want to thank you for taking time out to be here with us today. I thought this was incredibly valuable. You all brought great insight, and I encourage each person watching live or on a replay to check out each of they have books and conferences and videos and crash courses and all kinds of things. So check everyone out. And I know I'll see a couple of these guys in a couple of weeks in Belize. So that'll be fun. We'll be on the sand at the Investor Summit with the real estate guys, which will be nice. And Dave, maybe we'll get you out there in a future year. But thank you guys for coming and being here. Thank you to everybody who's joining live, and look forward to seeing everybody next month on the next event.